Article 24, Non-Discrimination. Now, before actually understanding the word discrimination in the sense in which it is used for tax purposes, let us just understand what discrimination means. There is a person, okay, and let's say there are two individuals, A and B, who come to this person. Now, A is somehow related to this person, let me call it as P, right? While B is not so related. It's a general belief that, everything else assuming this remains the same, right? Which means that A hasn't fought or he hasn't slapped P, right? Under normal circumstances, the assumption is that P is going to behave in a manner with A, which is better than probably what he would with B. And the reason for that is that P has some proximity or some relationship with A. The act of P giving preferential treatment to A as against B is known as a discrimination. That discrimination may be an outcome of the relationship, or maybe he may have some set of hostility with B, right? While we are not dealing with hostile cases over here, in tax cases what it means is that if there is a treaty country, right? So let's say there is treaty country 1, there is treaty country 2. There are two people, A and B. A is a resident of treaty country 1, B is a resident of treaty country 2. What tax discrimination means is that A gives certain preferential treatment insofar as taxability is concerned to A, while those same kind of treatment are denied to B. That is something known as discrimination. Now, if I come to the meaning, a general meaning of non-discrimination, right? Differences in tax treatment, there is no other treatment but tax treatment of two taxpayers, in our example A and B, who are placed in identical means exactly same or comparable situations, right, which result in double taxation for the taxpayer is discrimination for the tax purposes. Any treatment meted out to B, who was the non-resident in our case, right, which kind of imposes any form of double taxation to him, is known as discrimination. However, where the treaty itself provides for different treatment, it is not covered by Article 24. Now, what this means is that if the treaty provides that on royalty and FTS, the 10% of the gross amount will be held as withholding tax in the source country, even though for their own residents, they are providing a tax treatment on a net basis, which may be, less than or more than 10. Such a treatment is not going to be differential or a discrimination. Why? Because it is the treaty itself which is providing that in such cases, we will withhold taxes at 10%, right? There are various types of discrimination which are there, right? Discrimination could be based on nationality. So if a person is a national of India, if he gets a different tax treatment vis-a-vis if he's a national of United States, then it is said to be a discrimination based on nationality, right? Now, in India, the tax laws are not based on nationality, they are based on residential status, and therefore, to a large extent, this article may not be relevant for people who are nationals of India, or from the application from an Indian tax perspective, but the same article may be relevant from a US perspective, because there, the citizens of US are subjected to tax, right? even though they may not be a tax resident in a particular year. Towards permanent establishment. And this is covered as a part of Article 24, paragraph 3. Before I actually explain this, you must be wondering, where is Article 24, paragraph 2? Now, 24.2 may be there in some treaty, it may not be there, in which case this may become 24.2. Deals with the case of stateless person. The stateless person are the person who may not be a resident of any contracting state, right? But if they are national, let's say of United States, then they may be able to take the benefit of Article 24, paragraph 1. Right? But that's not there in most of the Indian treaties, so that's not discussed over here. Let's come to Article 24, paragraph 3. Towards permanent establishment. If a foreign company has a PE in India, then the profits of the PE are taxable as business profit under Article 7. Right? What this particular article seeks to ensure is that when you are calculating the profits of a PE, the net taxable profits of a PE, the benefit that you give to any local enterprise, a local company, right, in terms of deduction of expenses, carry forward of losses, or any other thing for that matter, should be similarly given to the permanent establishment as well. Right? You cannot discriminate when calculating the profits of a PE as to what deduction should be allowed and what not be allowed, which are different from what you have given to a local company. We will look at this as we deal with this in more detail. Then there could be discrimination in terms of deduction for royalty, etc., or taxable capital. Now what can happen is that, let's say for example, there is an Indian company, right? This Indian company makes a payment of royalty to a non-resident, and it also makes a payment of royalty to a resident. What this particular discrimination clause provides is that you cannot impose conditions on the Indian company that to claim a deduction for the royalty which it has paid to non-resident, the set of conditions which should apply should be different from what are applied if the same payment were to be made to a resident. This is dealt with in Article 24, paragraph 4. Based on ownership. Now, again, it's an interesting case. What can happen here is, suppose this Indian company is there, right? If this Indian company were to be owned by a listed company, right? A change in shareholding of the Indian company would not result in denial of carry forward of business losses because the ownership is with a domestic listed company, right? What this particular paragraph seeks to deal with is that in case the ownership of this Indian company is with a foreign listed company, right? For a same change in shareholding, you cannot deny them the benefit which would have been available if the parent or the owner of this company would have been a Indian listed company. We are going to see all these articles in detail in the subsequent slides.